Well, welcome back, everyone. Look, I just want to do this quick video about this article that's come through on MarketWatch that I just want to share with you. So, Fed's Bullard says U.S. economy within reach of full recovery this year. Yeah, right. V-shaped recovery. Yeah, right. Anyway, the St. Louis Fed president said that he's more optimistic than most, acknowledging that downside risks lurk. I don't think the Fed have got a clue at what they are doing. I think, as Jeff Snyder says, that there's no such thing as a Fed put. They can't save the economy. They can't save markets. All they do is jawbone. They just go out there and say they can do all these things and hope that everyone believes them and rushes out there and kind of front ends the Fed, so to speak. But let's just read this article. The U.S. economy is within reach of a nearly full recovery by the end of this year, said St. Louis Fed President James Bullard on Thursday. The economy is expected to have rapid growth in the third quarter, reversing the steep decline in the April-June quarter when the pandemic shut down the economy. Anyway, economists now expect strong growth in the July-September quarter. If this continues in the fourth quarter, Bullard said the US could return to the average level of national income, one way to measure the broader economy in 2019. For instance, if GDP grows at a 35% rate in the third quarter, it would need growth at a 10% rate in the final 3 months of the year to hit that level. Anyway, such a forecast is a little bit outside of what even the optimistic forecasters are saying, but I wouldn't put it out of the realm of possibility that you could have the fourth quarter GDP close to our average for 2019, and that would be a great outcome for the US economy. Look, it would be, but look at the global economy, look at the US economy. California's shut down. California's economy is bigger than Australia's economy. They're locked down. They're shut down. I seriously don't know what they're smoking. Maybe. Anyway, let's keep reading on. Economists surveyed by MarketWatch expect third quarter GDP will grow at a 25% annual rate as it snaps back from the worst of the shutdown, and they believe the fourth quarter will see growth at a slower 6% pace. The economy plummeted by a record 31.7% rate in the April-June quarter. The government won't release the first estimate for third quarter growth until October 29. Why is that? Why? Bullard said that the fact that hitting the 2019 average income level is a possibility shows you how far we've come. He said a second wave of the was possible, but that it shouldn't dominate forecasts. What I'm kind of pushing gently back against in the forecasting community and maybe showing my colleagues is that the baseline case is really what the private sector is adapting. Has he not had a look at the unemployment numbers and those that are continuing to go onto the unemployment line? He said he didn't think the US was that far from having simple, easy technological solutions that could lead to a return to activity, pointing to advances in rapid testing. Okay. The St. Louis Fed president cautioned that downside risks remain substantial and things could go wrong. He said he wasn't advocating a change in the Fed's low interest rate policy and agreed with other Fed officials that the economy was still in a deep hole. Finally, he's starting to speak some sense here. Earlier this week, Bullard said he didn't think a new congressional relief package was as much of an imperative as it might have been in July or August. It seems like, at least in some broad macroeconomic type of calculation, we have enough resource to cover this. And that's why the Fed are begging, Jerome Powell is begging Congress to do more fiscal. Every central bank around the world is begging their governments to do more fiscal spending, which personally I don't agree with. And you can argue with me in the comments, that's fine. But now he's saying, we don't need a congressional relief package. We don't need the fiscal spending. Anyway, many other Fed officials, including Jerome Powell, have urged Congress to pass it. Well, there we go. I should have read on, shouldn't I? I'm more optimistic than most, Bullard said. Another fiscal package might come early next year, he noted. He said more congressional grants to small businesses hit hard by the pandemic might be a good idea. During a discussion with reporters after his speech, Bullard said he thinks inflation might exceed the Fed's 2% target next year. Well, we did a video about Warren Buffett and Stanley Druckenmiller and Ray Dalio, some of the best investors of all time, now changing their portfolios and have been changing their portfolios for a little while, expecting inflation. So I don't know. Maybe Bullard might be onto something. Maybe he's right. Maybe we do have tremendous kickback in the economy because it's pretty much been a K-shape. So you got the rich getting richer and everyone else going on to the breadline. Anyway, this is not an economy that's designed to grow at a 30% rate, and you would expect to see certain kinds of supply constraints, Bullard said. This will put upward pressure on prices. I've said that also in other videos. That as businesses go under, there's less goods and services being produced. The more we move away from globalization to deglobalization, that is more inflationary. Every economic theory has said that globalization is deflationary. So if we go in the opposite direction, then that has to be inflationary. So anyway, he might be on something here. Bullard's forecast is well above his colleagues. The median forecast of 17 Fed officials is for inflation not to hit 2% until 2023. The Fed would like to see the return of higher inflation. They are more worried about the persistence of low inflation, which saps energy from the economy. That's rubbish. These guys don't know what they're talking about. No, I'm not going to go on a rant about it right now. I'm just going to keep reading this video, but I'll put a link in the descriptions. Just a little article. It's actually a extract from the Austrian economist Ludwig von Mises's book about inflation, and perhaps these Fed officials might want to pick up the book and read it. Stocks which have been volatile this week moved higher in afternoon trading with the Dow Jones Industrial Average up 232 points. And there we go. There we have it. So, look, he's saying there's going to be higher CPI numbers. When he's talking about inflation here, he's talking about higher CPI due to supply chain issues. But he thinks we're going to have tremendous growth. Look, I guess we need people to be optimistic. People say I'm a bear. At the moment, I'm a bear. I'm a bear on asset prices. I'm a bear on the health of the economy. I'm a bear on the debt bubble that we have produced, and I'm a bear on the overall monetary system. But doesn't mean that I'm not a bull on precious metals, on farmland, quality farmland, and natural resources and commodities and other things. So, and in time, maybe I'll be a bull on asset prices or assets again, like stocks and real estate, etc. Anyway, I thought I'd just share this article with you. What do you think? Do you think we're going to get a V-shaped recovery in the economy? Do you think we're going to see high inflation moving forward? Do you think we're going into a big deflationary period? Or could it be a bit of both? Could there be inflation in, say, goods and services, or some goods and services, while deflation in asset prices? Anyway, thanks for joining me once again, and I'll see you next time on another edition of Finance Uncut.